Welcome to the Bullhorn. Here with me as always, Howard. Let's get right down to it. Ugly day for the markets on Tuesday, but not for Ken and Barbie. Mattel hitting a 52-week high. Hasbro's doing decently lately as well. What's going on in the world of toys?
Well, I think there's just a general lift going on in the market, and institutions playing catch-up. These stocks are not exciting. Icahn buying 5% or increasing a stake in Mattel. Better than expected earnings, but our stream is not that excited about it.
Clearly, we've got the holiday shopping season. We've got the big Toy Fair show early next year, so people might be buying ahead of that. But it sounds like you wouldn't be really looking at either of them, and not even from an either-or scenario of say buy Mattel over Hasbro or vice versa.
Yeah, not my style. I mean, in the middle of the Packers. I think as small investors, we can only own so many ideas, and I'm queuing for the best of the best. But I hope, for everybody's sake, it's a good sign for the consumer. But, right now, not for me.
Gotcha. All right, another potentially good sign for consumers, Dick's Sporting Goods had a solid quarter. Are people on the stream excited about the sporting goods area as, maybe, something that's resistant to, further economic sluggishness?
I think what Dick's has done is, like Best Buy and electronics, and again, this is not an easy own. It's one of those that traders and institutions move around with the market, is that they are the sports authority Dick's. That's it. That's like Best Buy and Walmart of sporting goods. So you walk into Dick's, and that doesn't mean my son needs a ping pong table, wants a ping pong table. That's where we're going tonight. I mean, it just so happens. So I think they're just winning by default.
Wondering, though, before we move on to our last topic, how important do you think is it going to be for the average investor to realize that Dick's and some of the other hot retailers, Urban Outfitters comes to mind too, heavy short interest in those companies? So do you think that some of the run-up is just maybe a short squeeze? Some people have to be worried?
It's a great question. I think here's the issue. Institutions have been caught in a lot of these stocks. The consumer is dead. The consumer is dead. The consumer is dead. It's been a mantra for 4 or 5 years. And the consumer is, hard to kill.
All right, well, I think that brings us to our final topic. Internet companies, particularly e-commerce, we've got Black Friday and then Cyber Monday coming up. If you take a step back and look at what some companies like Amazon, Priceline, these stocks are just amazing when you consider how far they fell in 2000, 2001. What's your thought on why some companies have emerged as dot-com survivors when so many just completely fell by the wayside?
I mean, you look at, they're the Tiffany's, they're the Coaches, there's the platinum of internet stocks. Listen, if you want to own the best, there's Netflix, sorry, not talked about, but there's Priceline, which leads travel. And there's Amazon, whose Kindle is unstoppable.
Right, so yes, Amazon, Netflix to a lesser extent, Priceline, dot-com survivors, and it'll be very interesting to see, whether or not there's the pullback in 2011 since they've had such a great run, or if they continue to do well. We'll be talking again on Friday, probably about some little auto company going public. See you then, Howard.